welcome everyone. Welcome to the CoinRock show. Different setup today. We are moving studios, so redoing the studio. So this, I think, probably the only session of the show today that will be a bit different in terms of background. We have a guest coming up in about 10-15 minutes. We'll be talking fintech. We'll be talking SEC. Will be talking writing books because he has written a book, at least one book too that I know of. So welcome everyone. The market today, I just had a few calls today talking about the state of the market actually, and we're ranging. Nothing has been happening since January, February. We've been talking about this on the show a lot, so welcome everyone who just joined. Let's have a look at some of the comments here. Share the and the team, if the team can tell me, audio should be okay. Mic quality here. Let's have a look. Let me just move something here. Okay, let's switch to this mic. Mic should be a bit better now. All right, good. Thank you for the... I don't know why this is a StreamYard issue. I don't know why it says microphone Samsung 9 Q9U, so that's the model. It says it twice. It says, I don't know, this is a StreamYard thing. Strange. But we are back. Hope everyone's doing well. So yes, the market. I mean, the market has been pretty much down only since, well, not down only. For many alts, it's been down only. For Bitcoin, it's been rangy, right? I mean, not too bad. Michael Saylor just bought a, what was it yesterday? He bought, let's have a look at some of the news. I believe he bought around 500 million yesterday. For those who are just joining, welcome to the show. We have Mel joining in a few minutes, in about 5-10 minutes. We'll be talking fintech, we'll be talking SEC, and last week we had the head of the VP of growth at Kraken. That was a great conversation to kind of, getting some alpha for you guys on what they're seeing on the centralized exchange side, and of course the institutional side. So today, SEC talk, fintech talk, and looking at the news here, I mean, we've been talking about this a lot, right? Look at this, all these updates that I know you guys want to see up only season, right? But the reality is, it's been very choppy for the last few months. But while the chop has been chopping people out of the market, I mean, if you look at crypto interest from retail, is non-existent today. You can go to Google Trends, go to trending, type in Google Trends into Google, then type in the word crypto or Bitcoin. You'll see that, retail is not here, which in my view is actually very bullish. If you look at Bitcoin being at 106, 107, 106, ETH at 2,400, and Solana at 150, without any retail interest today, just literally at most a few hundred traders actively trading. If you actually know how to look at the read the volume and look at the trades, is actually less than a few hundred people trading these alts, these meme coins now. So it's extremely slow. To us, looking at this, for example, Germany is one of the major banks in Germany looking at rolling out crypto trading by 2026. So, I know everyone wants to have up only today. The reality is these big groups, and this if you've been watching these shows for the last several months. We did the first one, I believe, in January or February. The big boys, the banks, the funds, it takes time for them to build infrastructure and or deploy in crypto. So this is planned for 2026. Germany's, I'll say it with a German accent, Sparkasse. That's the benefit of growing up in Switzerland. You learn multiple languages because, as you guys know, I'm sure you speak 4 languages actually in Switzerland: French, Swiss German, not pure German, Swiss German, Italian, and Romansh up in the mountains. Yesterday, Robinhood. This was, I'd say, probably the biggest news yesterday. Robinhood's talking about the tokenized stocks feature. We talked about, so last week with the VP of growth from Kraken, we talked about this is also a big move for a lot of these institutional players. Robinhood has launched tokenized trading of US listed stocks. So this is going to be a bloodbath for all these companies competing against each other. I'm very curious to see who wins. I think there's going to be multiple winners. It's not a winner take all market because some people will prefer trading in on Robinhood. Others will stay maybe with on Kraken and other platforms. So it's going to be interesting to see kind of which platforms win in the next 1 to 5 years. I think it's a huge. It is a $1 trillion market with the amount of money coming into the space. Robinhood has been very aggressive with this, so that's going to be interesting to see. Sale of buys yesterday, $530 million in Bitcoin again. What's funny is everyone, and I agree with this, right? You have all these institutions buying billions of dollars worth of Bitcoin, and Bitcoin is not moving. I mean, I know I see the comments, people expecting every buy to add $1,000, $2,000, $3,000 to the price of Bitcoin. And again, we've been shopping, right? So interesting to see the next 12 to 24 months when you have dozens of micro strategies buying this. It's going to be interesting to see how that plays out. But again, he's pushing it. He's adding more. South Korea here stopping CBDC. I just pulled up this headline because I didn't see it on social. I just wanted to read it with you guys. South Korea's central bank has suspended its pilot program for a central bank digital currency, which, to be honest, we do not like. We do not like CBDCs. As policymakers and financial institutions turn their focus to stablecoins. We've been talking about stablecoins for months here. I'm extremely bullish on stablecoins just because that's what people use. And legislation is coming up in the next few months, 2-3 months. The US has committed to coming out with, so basically publishing the updates when it comes to stablecoin legislation. Scott Besson saying that in the last 24 hours. So it is coming. I'm personally very bullish on stablecoins and very bearish on CBDCs. I think it's just it's not a good move for humanity. Stablecoins, though, have proven to be extremely resilient, especially Tether, which I know that everyone likes to knock Tether. But like I said multiple times, the last thing you want in crypto is for Tether to go to zero. Otherwise, your bags are cooked. Tether is I hate saying this, but hopefully pray. You have to pray that Tether is too big to fail. Tether is a major player and part of the glue of crypto. So I always find it laughable when I see people, praying and wishing Tether a Tether crash. Stablecoins have proven to be one of the best use cases for crypto, and I'm actually personally very bullish on what's coming up in the next 6 to 12 months when it comes to stablecoins. Again, another one about stablecoins. Stablecoins overtake traditional networks as preferred payment rails. We're just at the beginning of the stablecoin craze, and big players, when I say big players, it's the banks, it's the funds, it's governments looking at this and really wanting to play an active role when it comes to stablecoins. And let's have a look, and then we'll take a quick break. Let me ask the team here if Mel is ready. Team, if you can tell me, that would be, and then we'll take a quick 2-minute break, and then we'll come back for the the guest conversation. Bitcoin holds firm. This is yesterday, 2 days ago. In the last 2 days, Bitcoin holds firm above $107,000 as traders eye key economic data. Again, I think that seeing like practically no interest from retail, zero euphoria. No one's buying crypto. No one's buying Bitcoin today. It's only it's only you guys, right? It's only you, the loyal ones. You take the time. If you're watching this stream and you're on here, you are taking the time. You're doing your research. You're active in the communities, and that's how you win. When euphoria hits, when retail comes back. And right now, it's crickets. So this is I say this in some of the private groups we have. The more active you are in these phases when everything is boring, choppy, and people get chopped up trading, and you see how many liquidations. The market makers are very smart. As soon as you see some bullish headlines last week, everyone's going long and max leveraging, and then they bring it back down, and you get chopped up. So, you're dealing with people much more sophisticated than you, much smarter than you, with more tools than you. If you're leverage trading and 10xing your capital, going on these massive trades, you'll get chopped up, and many have been chopped up. So I can see Mel is backstage. Give me a thumbs up, Mel, and I will take a short 60-second break, and then we will welcome Mel to the stage and have as always, a good conversation. So I will add the let me push the BRB banner here, and then we'll come back in about 60 seconds. Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. Welcome to the show.
Well, thanks for having me. I appreciate it.
Yeah, it's going to be a good one. So the way we start these shows off is I generally look at the and read the bio here just to give everyone kind of some context, and then the stage is yours. And you basically go ahead and tell people more of who you are and what you do, and then we just take it from there.
Sounds great.
So Mel Mattison is an investor, author, and former fintech executive, having served as the CEO of 3 separate SEC-regulated broker-dealers. Mel combines insider knowledge with a critical eye toward the economic forces that shape all our lives. He holds an MBA from Duke University and studied creative writing at Loyola University in Chicago. Welcome, Mel. That's the short bio. Tell us more.
Yeah, well, I think this is actually kind of a little fortuitous time to have me on, given the Robinhood announcement yesterday, which I personally think is seismic. So a lot of people that might listen to me in the past, they know me as more of a macro thinker. I have in my Twitter bio, financial philosopher. I like to talk a lot about the fiscal situation, debts and deficits. But where I really was my bread and butter was running broker dealers. And you mentioned that in the bio. So I was the CEO of 3 different broker dealers, SEC5, Vested, Equity B. These were broker dealers that specialized in transfers of private shares. So we had Vlad out there yesterday, a broker dealer, Robinhood, right, talking about essentially on-chain transfers of private shares with OpenAI and SpaceX. And so this is one of those rare situations where normally I'm kind of a more macro type, bigger picture guy, but it dovetails into exactly 20 years of work that I put in the broker-dealer business. And I was flabbergasted by it. So I was listening live to the presentation. I immediately posted on X, on my X handle, Mel Mattison 1. I'm like, this thing's going to 100 in short order. This is stuff that people have been thinking about for years. I'd been dealing with this stuff. 2022, I'm working for a startup firm. It was called Vested. One of the original founders was an original employee of Circle. We're working on transfer of, private equity. these non-public shares that are in these huge companies. How can we do it? We're talking about tokenization. There is a subsidiary started called Securitize. Like, we're just imagining how could we put on chain the transfer of, private shares, and he's announcing it's available. And it just blew me away, because 99% of the time when a company has an announcement, it's a total sell the news event. And I was listening to this and I'm like, this is not a sell the news event. This is a buy the news event. And this is Q3, which we start today. I think this is a new era of blockchain meets TradFi. It's over. The whole debate about, is DeFi going to enter TradFi? And I think today is the end of that debate. And we are now in a blockchain world, because it just makes so much sense. It's ridiculous. I've listened to some of your, podcasts and different things, and doing things on L2, L3, what people are putting together, off of some of this stuff. It's just now getting started. And if I could go on for one more second, I would add,
of course,
it's not separate from everything else that's going on. It's part and parcel of this bigger picture. And it's the DeFi, the administration in the United States pro crypto stance. It's the AI revolution. It is the new world order, where we are emerging from what I would almost call a Copernican break. I call it a Copernican break, because basically what we're doing is we're separating ourselves from a world where basically something like gold, and this happened back in 1971, was like a cornerstone of the economic community. And we're moving into something completely different, and people do not get it. So when I listen to like Bloomberg and CNBC, and I listen to these people, I think they're well-intentioned. I don't want to put them down. I don't want to call them stupid, but I literally think they're operating from like a Earth-centric universe, and we're now in a solar-centric universe. And so everything they say sounds stupid to me, even though they're intelligent people. So, I mean, I'm so excited to be on with you today, because I think this is one of the most exciting times in finance in my lifetime. And, I've been doing this stuff for 25 years. I was born in 1975. I got involved in the broker-dealer business, well over 20 years ago. And like I've said, I've been the CEO of 3 different SEC registered broker-dealers. And to me, this is the most game-changing moment of my entire career, was basically yesterday listening to Vlad's announcement.
Yeah, I'm surprised and also honestly impressed by how Robinhood has been executing. I think COVID helped Robinhood big time, just because at the time it was in the UK, and I remember they were trying to get into the UK market. This is when they kind of popularized the US space, really, for retail, onboarding millions of retail traders, and they were trying to get into the UK. And so they had a waiting list, and even within the city of London. So some of my friends still run hedge funds, and there was talk about Robinhood, but they were not taken seriously. It was kind of the cheap version. It was perceived as a wrapper for non-serious professionals, non-serious investors. It was the kind of Joe Schmo down the road who wants to trade and buy Tesla stock, and of course GameStop put them on literally in front of Congress with a Citadel connection. And so I think that was a pivotal moment for the company. And I'm very impressed by how they've executed over the last 2-3 years. They've been very aggressive in the way they roll products out, and they do communicate, but they execute more than they communicate, which culminating with yesterday. I mean, they're just moving faster than the incumbents, and that's to me, it's it just shows how these companies, if you compare them to the Interactive Brokers, the Schwabs of the world, who still, and I know those conversations are happening, but still just taking way too long to adapt to the Robin Hoods and these new fintech players who are just moving much faster. What's your view from how different was it to working within those three companies, SEC registered broker dealer? What's the difficulty that you saw, and why? So you mentioned yesterday being a big event. Why is that? Like, why is it such a big deal for people watching this who don't have your experience?
Well, I mean, I think we could almost even, like, if you wanted, like, go down a rabbit hole of how traditional finance works. And I think you did an interview a week or two ago with a guy from Luma or
Lumia.
Yeah. And he was talking about how it's not about just the L2, right? He was talking about how can we provide liquidity in L3 and what's going on. And I'm not like an on-chain expert, right? I'm not, like, my background is more TradFi. And so I think, like, my perspective that might be value to your viewers, especially if they're, let's say younger people that 30 something work in Web3, and they're like, how is the old school looking at this? I can give you that because I used to be old school. I worked for the big broker dealers, the big asset managers. When I graduated from business school from Duke, I worked for Russell Investments. We weren't a huge company, but we managed over $250 billion. I mean, that's not small money. And the guy you were talking to, he's like, people don't look at a lot of stuff that are true institutional because it's just too small time. Like, the amount of money we're talking about here is just so big. Like, you know, they're not looking for little advantages on some $100 million type moves. Like, what they're looking at, and then you've got the whole compliance structure. And that's what I also understand, because I was the CEO of these broker dealers. I worked with regulators. I understand. And that's what blew me away with Vlad's announcement. I'm like, how the hell did this dude get this away with these regulators? Now, there's a reason why it's only being rolled out in Europe, because I know the US regulators, and they're hard as hell, and they were not anywhere close to being willing to say this stuff's going to happen under the Biden administration. But when you look at the Trump administration, when you look at what Eric and Donald Jr. are doing in crypto and Web3, and you understand, like, who's now running this country here in the United States, then you start to understand what's going to happen in the SEC. You say, then this folds into, like, what's happening with the Fed. This folds into everything. So everything is part and parcel of a grand picture. And this is what I call a Copernican break. We are moving away from a universe that was like an Earth-centric universe to a solar-centered universe. And this is going to happen. And they're not even beginning to talk about, like Vlad talked about it, like, you know, right now, basically what they're doing is they're replicating on chain. You know, back end stuff that's still TradFi, right? So they're basically putting a crypto wrapper on TradFi, but the goal with the acquisition of Bitstamp and eventually is to make it truly on chain. And that's the moment where things just really shift, because, and this goes into like whole tons of stuff that I love to talk about, which is like DTCC, Seed & Co. You know, I don't even know if you've ever heard of those companies, but this is where almost every equity in the United States is owned on paper. So we're talking about the mechanics, the plumbing. This is my expertise. This is what I did. What's happening behind the scenes when you buy a stock? Who's really owner? Right. Right. Who? If you go to the Apple Treasury and you say who owns Apple stock, like 80% of Apple stock is going to be owned by a partnership called Seed & Co. People are going to be like, who's Seed & Co? This is like David Rogers Webb, great taking type stuff. But it's like, okay, Seed & Co is a partnership that was set up as a subsidiary of the DTCC, which is the Depository Trust and Clearing Corporation, which was set up in the 1970s under this dude who was a former CIA operative that worked for USAID, by the way, to essentially take all these paper trades and consolidate it. So when you buy a stock at like, Morgan Stanley, right? What happens? You buy that stock. Morgan Stanley owns the stock in what they call street name. Morgan Stanley pushes that up to DTCC. DTCC actually owns the stock. They push it up to Seed & Co. And then, if you own that Apple stock through Morgan Stanley, eventually on the books of the Apple Treasury, the owner is Seed & Co. This is breaking that all down. It's a complete disintermediation of the entire financial structure. This is why when I started in the business in 2004 and I first got my broker-dealer license, we were T+3 settlement, because that gave you 3 days to settle. What happened during those 3 days? It's float. It's people get to collateralize it. They get to do everything. Then we moved to T+2. Then last year we moved to T+1. There's still T+1 settlement. What this allows is broker-dealers to hold in street name securities, collateralize it, use it, essentially stake it, to use a crypto term. And this is cutting that out. If you go to a true blockchain ownership of a security, you're revolutionizing everything. And this is not like, revolutionizing 2 trillion in Bitcoin.
Yeah.
This is revolutionizing 100 billion in global equity.
Yeah.
That's a 50-fold increase. This was massive, what Vlad announced yesterday. This was massive. This is a wholesale Copernican break. This is a new world. I think Q3 2025, today's the first day. People will look back and say, this is when stuff really changed as far as financial custody, the plumbing and mechanics of the broker-dealer business that I worked in for 20 years. And it's not even just me. I'll be honest with you. I'm like a broker-dealer, like, I don't know what you call it, scion. Like my aunt was one of the first female people on like the board of FINRA. She started a broker-dealer in California called Centra Spellman. It was eventually sold to Sun America in like 2000 for like 100. Like my family for like 3 generations, like we have been involved in this business. We know this business. And so when I tell you this was a big moment, it's a big moment.
Yeah. What do other companies do then? Because everyone's, we had the VP of growth of Kraken last week, and so Kraken's moving into that too, right? There's so much money to be made. What are the competitors doing now based on yesterday's move? How are they thinking about
they're just going to be catching up. They're just going to be catching up. And I'll tell you, like, this just changes everything. Like, you work at companies, like I work at Russell Investments. Like I said, we manage $250 billion. Like people don't understand all the mechanics of the plumbing underneath it in the mutual fund business, right? Mutual funds were the go-to for like the boomer generation. They put it in there. There's like a 0.7 or 100 basis point fee. People don't realize how much of that would go to the platform fee, 20 basis points for like. This is the plumbing. These are the 12B1 fees. These are the fees and the expense ratios that, if you don't know what the hell you're talking about in this business, you have no idea what the hell you're talking about. And so you don't understand what a threat this is. I can guarantee you the CEOs,
to the old way of doing things.
To the old way. They're scared shitless, just the same way they were when Vlad did zero commissions. Now they're saying, oh my God, he's blowing up. Like, to me, this is a huge, huge seismic shift that I think is literally historical. And like, I was just blown away by it when he started out. And then when he goes to private shares. So we could get into the whole private shares things, because the 3 broker dealers I worked for and was CEO of, SecFi, Vested, Equity B. And if people want to check that, they can go to Broker Check. They can enter in my name. They're going to find 2 Mel Mattisons, including my dad, because like I said, this is a family thing for me. Like, and if they click on me and Broker Check, which is the FINRA thing that gives you your whole history, they can show I did consulting for Wise last year. I've done, like, I've been across this business, and I'm telling you, this is a big deal. And it just upends everything. It upends absolutely everything. And if stuff actually starts to go on chain, and this is the DeFi promise, this is the moment where, you know, you're like, oh my gosh, like we don't have to go through DTCC, Seed and Co. You know, we in 24/7 trading, and it's not going to happen tomorrow. But based on what I saw, I could imagine a world in, let's say, 12 to 18 months where people are trading 24/7 US stocks in the US on chain. It's not going through any of these intermediaries. All this stuff is cut out, and Robinhood is at the cutting edge. And I'm like, actually, so one of those companies, let's give an example, like SecFi, is based in Amsterdam. You know, I have hundreds of thousands of shares in that company. I was one of the first employees. You know, so I'm thinking to myself, I just really hope like a JP Morgan or someone's like going to want to acquire SecFi and say, we need to get some of this, because this is expertise on private shares. So I told my wife, I said, I think the chance of like a multi-million-dollar payoff for us in the next few months just skyrocketed, because I think people are going to want to get expertise in these fields. And a lot of this stuff has been, you know, just like I said, just talked about. And then he just came out and rolled it out and said, it's live.
I think there was also a lot of confusion over the last 12, 24 months as to how it would work, who would be the first mover, even how the trades would work from the client-facing side, right? How everything's routed. So, and of course, now it puts pressure on these bigger groups. You mentioned JP Morgan coming in, and the way they play catch-up is, of course, by trying to acquire whatever they can quickly, and absorbing that, and because they don't want to spend 2 years building it, right? I mean, they're already trailing. So
time is more important than money. That's what I told her. I said, it's not that SecFi has incredible revenues that would justify, like, say, a $250 million purchase price. It's like, you know what? We don't want to spend 2 years trying to build what SecFi understands about, say, private secondary share sales. We want to just get that expertise, bring it on board, and we'll pay a premium for it. And, you know, I don't know, maybe the same thing happens with Equity or Vested or some of these firms that I've worked with. These are firms that were basically, what I was doing was I was pioneering, you know, how do you sell the privately held shares of these non-public companies? And we had to go through a lot of stuff. We had to understand, because a lot of these companies had, you know, transfer restrictions. And we had something we called the magic clause. And there was a magic clause in a lot of these ESOP plans. So their employee stock option purchase plan. And they would essentially forbid transfer, you know. So they'd say, you can't transfer these shares without company permission. And it's like, how do you overcome that? And a lot of these clauses allowed for transfer to trust. And so we had to do like a transfer from, you know, the company to trust. We used a company in Delaware, Bryn Mawr Trust Company. Like this stuff gets into the complicated financial plumbing. Like, how do you take a private share like an OpenAI or SpaceX, which is under certain SEC FINRA regulations, which forbids, you know, open transfer, which has accredited investor standard. How do you all of a sudden put that on chain? And there are other companies out there. There's Hive, a Canadian company, HIIVE. There's all these people that have been trying to pioneer this. And it's a democratization. It's a continued democratization of financial services, because these are the things that big companies and rich people, like, you know, if you've got $100 million and you're a client of JP Morgan Private Bank, they're going to come to you and say, oh, there's a new tender offer in SpaceX. So you want to be a part of it. You know, this is taking that and saying, hey, you know, if you want to get into OpenAI or SpaceX, and the U.S. administration right now, I think, is open to relaxing these accreditation standards.
I think so too. They're doing it with crypto. It's the ideal time to do it.
Yeah. So this is huge.
No, go ahead.
No. Go ahead. You go ahead. I mean, I want to go wherever you want to go, but I
Yeah.
actually was really jacked up yesterday listening
Yeah.
to that. I was like so excited. I felt it was like a quantum leap forward in financial services.
Yeah, we had the team from Second Lane. I don't know if you follow them. Same thing. So they broker deals Solana at like cents, like a few pennies years ago. And so secondary markets basically private too. And we talked about this. It was probably 2-3 months ago. It's again, but it makes a lot of sense for Robinhood to be, because that's the brand too, right? It's bringing what the rich usually have access to, right? These the family offices with the wealth
Yeah.
advisor.
That's what I used to
The
do. I used to
industry.
advise
Yeah,
family office,
of
single
course.
family,
Yeah.
go to these billionaires. When I was at Russell, I would go to the George Russell family office, who's the founder of Russell, founded Russell Investments, Russell 2000, all that stuff people have heard of,
Yeah.
in the 1930s out of Tacoma. And we would manage, hundreds of millions for them. And it's like, yeah, we would do these things. And it's like, these are the things
Yeah.
that are now going to be able for like some dude making $85,000 a year to get access to.
Yeah.
And
Yeah.
the thing that all these regulators always say is, well, these are risky. And, and it's honestly, I think it's such bullshit. But look, this is now changing. And I think it's moving. And, I think that people are going to, look, you can go into Merrill Edge, which is the Merrill Lynch retail platform.
Yep.
It's owned by Bank of America. Obviously, Bank of America took over Merrill during GFC.
Yep.
You can go on there and try to buy IBIT. They won't let you.
Yep.
They will literally block you from buying the BlackRock IBIT mutual. They will say, this is a risky investment. You want to go buy TQQQ? No.
Yep.
Like, why can't you do that? Right? Like, oh, well, in April, I felt like the market was collapsing and option prices were through the
Yep.
roof. And I wanted to access a leveraged ETF because that was the best way to play a strong rebound. And I'm a 45-year-old, 65-year-old investor, and I go onto Merrill Edge and I want to buy TQQQ or I want to buy IBIT. You can't. It's ridiculous.
Yeah.
It's ridiculous. It treats you like a child.
Yeah. I mean, that's a lot of, and I was going to ask you about how was it dealing directly with the SEC, right? Especially in the previous administration.
Yeah.
So as a CEO, you're obviously interacting with them. You have other people doing the paperwork, but ultimately you deal with them. How was it? What's the process that you can explain to people here, and why? Because they see the headlines, right? Gensler out, etc. What does it really mean dealing with the SEC?
Yeah. I mean, I dealt with them. I was the face of it. I would review all of the paperwork, but we also use like a white shoe, law firm in Manhattan, Lowenstein Sandler, like guys that actually helped start Robinhood. Like there's a guy there named Ethan. He's a partner. He's a legend in the field. He's been pushing for this stuff all the time. So there are people, even at these big white shoe Manhattan law firms, that are like, yeah, like we want to do this, and here's the way the law actually works. Like you go into like the Cornell law database and you read it and you read the, Exchange Act and you look at these things and you try to say, look, you guys are wrong. Like you're trying to stop us. You're trying to stop us from doing what we want to do. It's within the law as it's written. You don't want it to happen because you think it's risky. And it's like, yeah, it is risky. But so is betting $5 at a racetrack. So is buying a lottery ticket. So is all of this stuff. But what you're saying is, no, you can't have access to it. And I think all this stuff is super risky. I'm not telling anybody to go out and start buying private shares and they're going to make millions. And this is because there was a lot of guys we were selling mostly at SecFi. We were selling to hedge funds, and we're selling stuff in 2020, 2021 that just crashed like 80, 90%. So I'm not saying that what I'm saying is like, this is just bringing this possibility. And then when you add into it, talk about how, putting publicly traded shares on the blockchain, 24/7 trading. Like these are all revolution, and you start adding it on one on top of the other of all of those announcements they had. They had perpetual futures, they had private shares on chain, they had U.S. equities on chain for Europeans, they had all of these things in their announcement to catch a token. You know, it's
which was a great name. I thought it was very appropriate.
It was great. I listened to the whole thing. If anybody listened to it, it was a little over scripted, and they put in a bunch of pretty bad jokes that were not delivered well because they're not actors. But when the meat of their announcements, to me, was incredible.
Yeah. What's your there's a lot of conspiracy theories, right, from people thinking that the SEC doesn't want, you know, the average Joe to have access to this, not for protection but for opportunity, right? It's the good old boys club theory of this is only available to big money. What can you say about that? You know, because there's this thesis of we want to protect the retail investor. You have to be accredited. You have to go through this process in the US. But on the other side, they're closing their eyes for even riskier things. So what's the truth here? Is it they don't want to take a position? This is really more during the Gensler era and before that. Or is it really like they actually care about investor protection? What can you say about that?
Yeah, it's the same thing as 1776. There's a good old boy club called Dukes and Earls and Monarchs, and people said, no, there's a better way. And eventually the better way won out. And I think there's still a good old boy club, right? And this is what I was talking about with the DTCC, Seed & Co., this custody, this ability to hold float. So like, I think the main reason why we're T+1 settlement and not immediate or T0 is because people want this float. What does that float do? People might say, well, what does that do? What it does, it allows like a company, like a large investment bank, to like hold a substantial amount of stock like on their books before they officially transfer it to the new owner and use it as collateral. So you got that 20, like I sell Apple share, T+1 settlement, big deal. It's 24 hours. Well, what happens to that Apple share during that 24 hours? What happens is it actually goes on the books as an asset of the broker dealer that then they can collateralize and use. So to break away from like any float, from any collateralization, to take stuff and put it directly on chain and say, look, this is a instantaneous settlement. This is no more middleman involved. And then once it gets to a point, and like I said, this was fascinating to me about that conversation you had a couple of weeks ago, is like liquidity fragmentation, right? So okay, now people are going to do this. He's going to do it on an L2 Arbitrum, and you know, and this is going to be here, and then Morgan Stanley's going to do it this way, and JPM's going to do it that way, and the guy from Lumina was like talking about, you know, we want to basically use bridges, different things to just essentially put the liquidity wherever it's needed. And like, this is going to take time for this architecture to develop, but it is going to develop. And eventually
it's going to happen at some point.
Eventually, once it does, it's going to replace all of this. It's going to be a hit to Citadel, you know, which is, you know, market makers. It's going to disintermediate in a way. And this is what's kind of going on, I think, in a bigger picture way, is that kind of Web 2, it kind of disintermediated like some basic stuff, like a book, right? Okay, you don't need a book to get the physical book. You can put, this is starting to really disintermediate real world structures that are multi-billion, 100 billion type industries, and people are just starting to chip into it. And so if you look at a Robinhood and you say, okay, it's got an $80 billion valuation, but it's pioneering all of this, like, why couldn't it be a $100 or $200 billion valuation? If it's a $200 billion valuation, that's a, stock price of 220, 230. Like, why can't Robinhood go to 220 or 230 in the next 2 to 3 years? I see no reason why it can't do that. And so and I think also Robinhood has a very good advantage. So if I had to play a game of like Coinbase, Robinhood, Circle, like Robinhood's already a US broker dealer, which is kind of like a gold standard type thing. And it's got all of this. And so when I look at Robinhood and I advise some of my consulting clients, like, which I've been big on Robinhood for a long time, since it was like $17 a share. That's been one of my biggest holdings, are basically Robinhood and Nvidia. I'm basically I was sending out messages yesterday, add more, when it was 90. I was like, as crazy as it sounds, this is not a sell the news event. 99% of the time, these are sell the news events. I thought this was a buy the news event.
What's the so coming back to what you said about Web 2, right? So not Web 2 ultimately, because I come from Web 1, Web 2. It didn't change much. It didn't change anything to the actual, let's call it the plumbing, right? It just made things more efficient, faster. You didn't need to call people on Wall Street, in the movie Wall Street, where he has to pick up the phone to put in orders, but it didn't fundamentally change the actual structure of the business and the industry. This changes the actual structure of everything.
That's
where do you see, so you mentioned Coinbase, because everyone now is watching this, right? It's it's like the battle started, like the competition has been looking at this for probably, I remember seeing posts from Citadel actually hiring, opening a lot of job openings during the bear market, looking at this. So they've been looking at this for a while now, but no one's really making a big move. What do you think are the next, like, if you have to look at the next 6 or 12 months, how does this industry, where does this go specifically when it comes to on-chain trading?
I think this is the big theme that's going to be a multi-year theme: the tokenization of RWA, real world assets, right? And it's going to be house deeds, and it's going to be stocks, and it's what I see is, traditionally when I've looked at digital assets, I've seen Bitcoin as kind of, like Vlad said yesterday on the CNBC interview, a singular asset is, and I think there's been a lot of post 2022 breakdown, poo-pooing of non-Bitcoin digital assets. And I think this is the start of a new ramp up in ex-Bitcoin digital assets. And if you look at, there's a guy, Tom Lee, who's famous on CNBC. He's a big permeable type guy. He did a ETH staking company. I think that's not my thing. Treasury companies aren't my thing.
I saw that literally before the show here. About this was yesterday, right?
Yesterday. But what it is I think, like, TradFi guys, which I completely admit I am, are going to start looking and saying, okay, we kind of got it. Like, okay, Bitcoin is this store of value asset. Bitcoin is it. And then what we said to ourselves was, these other tokens that have some sort of like actual utility, they're always replaceable, whatever. So we should never really put too much value on them and forget about them. Now what we're going to see is the DeFi ecosystem start building on certain of these, things, like where Ethereum becomes the L1. And stuff gets built on it, and that's the L2. And we might look at some of these things and say, wow, these things really have potential. And so I think we could be just beginning like a big cycle into quality ex-Bitcoin crypto that has been essentially in a bear/consolidation period for a long time. I think this move yesterday could start a move into people saying, okay, I used to think maybe if I'm going to own crypto, I'm just going to own some Bitcoin. Now maybe I want to own some ETH. Now maybe I want to own some Sol. Now because there's going to be stuff being built on this. So I do see this as very positive. And what happens is when you get these treasury companies and you get these other things, and people say, well, why isn't Bitcoin at 180? It's because money that would have traditionally, like TradFi guys like me who said, if I'm going to put money in crypto, it's going into Bitcoin. They're saying, maybe I should put some into Bitcoin, but maybe some into ETH, maybe some into Sol, and maybe some into a treasury. I don't like treasury companies. I never advocate that. But, so what I'm saying is, this is a broadening out. But if I look at even the Bitcoin, chart pattern, it's got like a big bull pennant pattern folding, and I think it's going to ramp up. I've been saying for a long time, I think Bitcoin easily hits 150 this year. So I think Bitcoin's going to do amazing. I think what's going to finally start to happen in the second half is some of these well-known quality coins and tokens are going to start doing extremely well also.
Yeah. How did you get into crypto? Because I mean, now everyone wants to get into crypto just because its number go up, right, for the last few years. But 5 years ago, even like before COVID, it was still very, especially coming from TradFi, right? I mean, I have a lot of friends in TradFi too in London, and it was always, I said this on the show a few times. I was looking at with several friends who have big name experience in TradFi to like basically starting an exchange. This is 2021. And we had conversations with the names that everyone knows, and no one wanted to touch crypto. Like those funds, those banks did not want to, they were open to investing, but always through an intermediary. So there was no desire in 2020, 21 to really touch crypto. You had a few smaller funds, right? Looking at Bitcoin. What made you make the jump really from TradFi to crypto?
Well, I think I'm just naturally kind of a contrarian, different thinker. So if everybody in TradFi is saying crypto's just a phase, like my immediate, like natural human nature reaction is going to be to question that. And I had been from a long time a big, actually precious metal person. Like I had very early on, over 20 years now, like believe, that there's a lot of devaluation going on. Like, go back to August 15th, 1971, U.S. goes off the convertibility of gold. That's been a big part of my life for a long time, and owning things like precious metals. In fact, I've got a microphone here, and just to prop it up a little bit, I use literally, this is a 100-ounce silver bar. I mean, like, cool, precious metals are all over the place in my life. I've been buying them for a long time. I think I bought that bar when silver was about $10, $12 an ounce. I mean, I've got silver bar. Like, literally, I've always kind of understood on some fundamental level that money is a construction. I'm actually a certified yoga instructor. You go back to Hindu philosophy. I have on my Twitter handle, like, financial philosopher. Like, I think we live in a Maya world, like Maya, this illusion. And there's an illusion about a lot of things. I think there's an illusion that when the Federal Reserve raises interest rates, that tamps down on the economy. I think that's a complete illusion. I think it stimulates the economy. I think Powell, like, keeping rates where he has simply been taking, money market funds that baby boomers own in the trillions that had been collecting 0.2% and starts giving them 5%. And now they start taking that 5% and they start going on ski trips to Utah and traveling to, like, I listen to people on like Bloomberg and CNBC, and I think these are nice people. They're smart people. They're operating from wrong first principle. They're operating from an Earth-centric universe. They're the Copernican break. They do not understand the way the real world works. I did a post a couple days ago, and I admonished people to say, like, take a listen to some MMT thinkers, like L. Randall Wray or Warren Mosler, and just expand your mind a little bit. I've read books like Murray Rothbard, Ludwig Mises, Adam Smith. I understand like the hard money Austrian school philosophy.
Yep.
But I think if you only limit your thinking to, oh, well, M2 goes up, that's going to drive everything, that's the way the world works, I think you're missing something. And so I think there's a lot of people out there that are very smart and they're very intelligent, but they're literally operating from the wrong first principles. And they're thinking, okay, interest expense is at 3% of GDP. That's going to be horrible. Well, the last time the U.S. had interest expense at 3% of GDP was 1986, or excuse me, 1985, and it stayed at 3% or above for like an 11-year period. During that 11-year period, from 85 to 96, the S&P was up over 340%, from like 150 to 720. If we see a similar move, that's going to take the S&P to over 20,000. So people that think, we're spending too much on debt, they don't they understand it's fiat.
Yep.
It's not real. Like you can print it. Like the government's not going to run out of money. I think Elon Musk is a complete idiot when it comes to fiscal policy. And I think he's doing a lot of harm by all of his posts. I think he's trying to tell people, oh, this is the worst bill and this is going to collapse things. And the US doesn't have the money and all this stuff. And these people like Massey and all these people, I'm like, you don't get it. Like, we don't live in some gold constrained world where the US government can't print. What you have to worry about is, are you directing resources towards something that is in short supply, which is then going to create inflation? So if you send a bunch of people $1,500 stimulus checks, they save it, they get put into lockdown, then they get released. What are they going to do with all those stimulus checks? They're going to start traveling. What's that going to do? It's going to jack up hotel prices. If you take cars and you take a basic windshield that's a piece of glass, and then you start putting into it, blind spot detectors and cameras to replace that windshield when there's a crack, it's going to go from $200 to $2,000. That's going to jack up car insurance premiums. Like the inflation we had post-COVID was partly because of money printing, but I think it was a small percent. I think most of it was because of fundamental shifts in the economy that were created by the pandemic, supply chain shifts, different things. And so when people say, oh, well, the US is going to run 6-7% of GDP, deficit to GDP, that's going to, I wrote a piece on Twitter in May when everybody was flipping out about the bond market. And I said, 10-year ain't what it used to be. Government's going to start financing itself on the short end. Like all these people saying it's a Liz Truss moment for the United States and 10 years going to 7%, like they're out of their minds. And I think I've been proven right. It's at 4.25 now.
Yep. What do you think of the Fed, Powell, interest rates? A lot of talk about that, especially when it comes to crypto, risk on, risk off.
Yeah, Powell is following from the Earth-centric universe, and he's thinking to himself, if I lower rates, it's going to stoke inflation. And he doesn't understand, if he lowers rates, he's going to reduce money market interest. He's going to reduce essentially what is stimulus into the economy. And that it's not going to be inflationary. He thinks it would be inflationary, and I don't think it would be. And I think what Trump is talking about when he talks about not issuing coupon, longer issuance, there's a big bid on the longer end of the curve. Like, people need to buy it, like life insurance companies, stuff like that. If they'd really reduce the issuance on the long end of the curve, there's so many forced buyers, it reduces that long end rate. If you then reduce the short end rate, what you do is you also reduce the deficit. So I also had a post out that last month, the interest expense went down. Why did interest expense that the government paid go down, even though year over year, even though debt of the government went up by 1.7 trillion, it went down because the Fed had reduced rates on the short end. So when Trump says we're going to save hundreds of billions of dollars, this is MMT. This is MMT philosophy. Like, you reduce the short end rate, and then what you got to do is you got to realize where you're directing resources. If you over direct resources, if Trump says we're going to build a big, beautiful wall across all of the Mexican-American border and it's going to be made of brick prices are going to go up. But hamburgers aren't going to go up. So yes, there's like M2 monetary inflation. That's part of the picture. But then it's also, where is the government directing these resources? After the GFC, the government printed trillions of dollars. What did they do? They basically took these loser, mortgage-backed securities on the balance sheets of banks, and they did TARP, and they made them whole. That didn't inject money into the economy, and therefore you had no inflation. If you take stimulus checks and just send them out to everybody and say, oh, and then everybody says, okay, I'm going to go travel or use it as a down payment to buy a new home, you're going to create inflation. So it's not about like just the money supply. Like, you can increase the money supply. Like, look at Japan. They're at over 200% debt to GDP. Like, so this whole idea that we're on the verge of a collapse, I think, is ridiculous. I think that the U.S. is eventually going to get to 200% debt to GDP. We're at 120. I think we're not even getting started yet on the amount of debt that we're going to print. And I think just like Japan, where like 40% of their debt is owned by the BOJ, the Bank of Japan, we're going to have the Fed buying this. And this is going to happen. And everybody on Twitter is going to be saying this is going to be money printing and we're going to have 25% inflation. And I think they're absolutely nuts. What is going to happen is it is going to increase asset prices. That is going to increase inequality in society. And that is a social issue. And that's why you see people like the primary candidate in New York rise to success. And so this is a very complicated, nuanced picture I'm presenting here. It's just not as simple as this, X and then Z. It's more about like, where are we going? And I think the government, corporates, everything is incented to continue this deficit printing. I don't think it's going to collapse the bond market or society, but I think it is going to exacerbate inequality, and that is going to cause more issues. And so I do think we have turmoil, volatility, protests, all that stuff in our future, fourth turning type stuff. But I don't think we're ready for a bond collapse.
Okay. So coming back to Powell, I mean, if you're saying this has, he has to have people around who are voicing some of those opinions too, right? So how do those decisions get made? I mean, everyone's watching literally his body language, right? On every public, I think he's talking. Did he talk yesterday? Talking today? I think.
Yeah, this week he's in Portugal. They have a big annual meeting there, the central bankers.
Yeah. So why is no one? So is anyone voicing this? Do you believe anyone's voicing this? And is he waiting? Trump, of course, is pushing hard for a change. But why is no one? Why are we not seeing anything from the Fed, basically?
Well, I think that when you voice this, you start getting into taboo territory, and what happens is if somebody in his position were to voice this, it sends a message to the markets that everything I'm saying is right. And if you take everything I'm saying as right, and I've been calling for assets, I've been calling 7,000 S&P by the end of the year, 150 Bitcoin. I've been calling for this stuff, from the April lows. Then you add credence to it, and you cannot do that as a policymaker. So there was a guy from the Fed who had written a paper on fiscal dominance. I forget his name, but it was a few years ago. And he wrote about how do you handle a fiscal dominant situation, and how did the U.S. essentially get out of kind of a semi-fiscal dominant situation we had after World War II when we were 100+% of GDP. And part of it is, and they use this term, and it's called surprise inflation. And you cannot project inflation. It has to be surprise. Why? If you project that inflation, bond markets are immediately going to react. Money markets are. And so what you have to do as a policymaker is you have to act like we're hard money, we're strong dollar, like Besant, we're strong dollar, Fed, we're anti-inflation. And then you act differently. And people that continue to believe the words and disbelieve the actions are making the mistake. And what's going to happen is they're looking at all of these central banks around the world. The ECB, the Swiss National Bank just took rates down to zero. This is what's going to happen. And the United States is going to do. That's why, the 2-year was 4% a few weeks ago. And now it's like 3.7 or 3. Like, the market's starting to realize they're starting to call bullshit. And they're starting to say, look, you know what? All this stuff about 2% target. Look, and not only is the 2% target ridiculous, but the way they calculate it is ridiculous. It's like inflation is much higher. So all this stuff, it's a fugazi, it's a Maya, it's however you want to look at it. And all these people are looking at it through this lens, like Elisa Bramanitz on Bloomberg, and they're acting like, oh, well, inflation could be spiking. Shouldn't
and they all know the truth, right? They're all smart people. Everyone knows.
I don't know if they all know it. I think some do. I think others are still literally like operating from a position of believing the narrative that's being fed to them. They're a little bit like, but they're still the Earth-centric believers, even though the science has been clear that we're in a solar-centered universe. The Copernican break. They're still going by that old thing. And what's happening is the market participants aren't. And so a lot of these people on TV are scratching their heads and they're saying, why is Bitcoin at 105 or 107? Why is the market at all-time highs? Why is the 10-year at 4.2? Why is that happening? Like, shouldn't everything be the exact opposite? And they're flabbergasted by it. And the reason why is they're operating from completely wrong set of first principles.
All right. 2 last questions. We have about 5 minutes left. Number one, what are you the most excited about? We talked about tokenizing, the tokenization revolution in a way. What are you excited about when you look at the news, when you look at the markets?
What I'm excited about, but also makes me nervous, is that I think asset prices are going up. And I even think that Bill Pulte, the head of the FHFA, the head of the Federal Housing Authority, I think he's going to come up with something to try to stoke mortgages. And, and there's over $12 trillion of accessible equity and home values in the United States. And I think it's not being accessed because cash out refi. I think there is a game plan to really juice this economy. And I think what's going to happen, what I'm most excited about in some sense is, like, I think asset prices are really just getting started. I'm not like trying to be sensational when I talk about $10,000 gold or 20,000 S&P or $250,000 Bitcoin. Like, I think these things are going to happen in the next few years. What that's going to do is the people that own those are going to become extremely wealthy. I think ultimately there will be an inflationary aspect to it. It won't be as much as people fear, but it will still be, instead of like spiking to 9 like we did in 2022, like, we're not going back to 2. We're going to be doing on PCE like 2.5 to 4.5 for a number of years. That's going to get debt to GDP down. Over that time, there's going to be people that have been left out of the system getting more and more upset. and it's going to draw them more and more to socialism. It's going to draw them more and more. And so what I'm kind of most excited about is this belief that we've got this financial, what I would call a bubble beginning, like a 20s type bubble. I've said the 2020s are very reminiscent of the 1920s, and that by the end of this decade, this bubble may burst, and this could be a big problem. So what I see is not what a lot of people see, which is like the bond vigilantes are going to take over and this whole thing's going to collapse in the next 3 or 4 months. I think we've still got 3, 4, 5 years of this, and it's just getting started. And the only thing that I'm like, fingers crossed, is going to kind of save our butts is AI. And we never got into AI in this conversation. I know we're running out of time, but that has deflationary.
Have you back, because we talked about so much about the macro. We should definitely do another one specifically around AI.
Yeah, that's a big deal. That could create deflationary impulses, reduction in labor costs, all of these things. And so then you get into what I call my rose-colored glasses optimistic mindset, which is even though all this crazy fiscal stuff's happening, AI is going to be deflationary. It's going to offset that. And this is all going to work out well. And we're heading into a golden era. And people, you sound smarter, you sound better when you're calling for doom. I have a hashtag boom, not doom. And I think we're heading for a boom, not doom. And I think that maybe AI is going to be the thing, and we can leave that as a tease for maybe another conversation, because I think
we'll do a special AI one next time.
Sounds perfect.
Yeah. Any closing thoughts? I usually ask guests their targets for BTC, but you mentioned 150 this year and up to 250. What's the time period? So 6 to 12 months. The audience loves numbers. So
yeah, well, BTC, I mean, 150 is just based on monthly closings. I looked at the 2021 high, 2022 low. The spread between those monthly closings was 44K. You add 44K to the 66, you get to like 106. You add another 44K, you get to 150. So I think 150 is my next target. After that, I'll reassess it, but probably 194 after that. And we'll make our way from there. I think Bitcoin is probably the best performing asset going forward for the next 5 or 10 years. And I think that, equities 7,000 by the end of the year on S&P. I'm just bullish on asset prices because of all of this stuff we've talked about. So it all falls in. It's all peace, and we'll see what happens. Maybe I'm wrong. We'll see.
We'll definitely have you back. Any closing thoughts?
No closing thoughts. All I would add is just, if people want to hear more of it, they can follow me, Mel Mattison 1 on Twitter. I've got a financial
link all
thriller
links,
book,
etc., around the stream and the replay
called Quaz. And I think the one thing I would add is be aware that the media is really presenting a narrative. They're operating from, in my opinion, incorrect first principles. And so even though people sound smart, and they are smart, if they're operating from the wrong first principles, they're going to be wrong. And that's why an idiot like me could make better calls than some of these big shots, because I'm operating, I think, from more correct first principles. And if you do that, I think you're going to be okay in this market. I think if you look at stuff from the old school way, you're going to be flabbergasted and you're going to be wrong.
Yeah. Mel, thank you for coming on the show. Thank you everyone for joining. We'll have the replays and articles coming out in the next few days. Follow Mel, and we'll definitely have you back specifically to talk. We'll do an update, of course, on the macro and everything, but specifically talking more about AI next time. Thank you for being on the show, and thank you everyone for joining, and we'll see you next time. Hey, thanks for watching. If you got value from this episode, you're going to love what's coming next. So subscribe now. We drop new episodes and videos several times a week. featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description and we'll see you on the next show.